Right, if I could, man, here we go in this conversation. If I could do the take two thing, here we are, take two. For the listeners, it's take one. Everybody, man, I'm excited to jump into this conversation with Scottie and Mike from Sincere Mortgage. And what a great time to be talking about mortgages at this time of the year where everybody's at. Man, there's so much to jump into. Mike, how you doing today, man?
Hey, it's a great day. Started off early morning, got a nice workout in. Working out in this infrared sauna gym now, which is really cool. It's high intensity, short bursts, and it's just a great day.
Great day. It's a great day to have a great day. I feel like I've heard that already today.
My personal story, began, close to 9 years ago now in 2016 when I got started in, real estate and then mortgage, and started at a small retail firm that quickly grew into a large one, and learned how to do what I do. And it was through serving the clients that I was able to serve there that I realized there was a client base that I wasn't able to serve at the same level. At the retail firm that I was at, we were really good at doing conventional VA, FHA, traditional cookie cutter, loans for homeowners, right?
Inside the box.
Yeah, right, inside the box, But for our real estate investors out there that want to grow their portfolio and leverage the equity that they have in their homes to grow their financial wealth, there was just products that I didn't have access to and couldn't offer to my customers. And so, fast forward from there about 5 years, and I connect with Mike, and he felt my pain as well, coming from the same company I did. He just made the switch over to the broker world sooner. I joined him about a year ago, and we connected with the same vision to want to serve real estate investors.
Talking about non-QM loans, if you think about it, your traditional bank, your traditional mortgage company, they do about 4 or 5 different loan products. And most of the time, they might underwrite those loans right in-house. So like, think about if you're going to GEICO to get your auto insurance, they can only write you a GEICO insurance policy, right? Even though there's hundreds or thousands of different options out there. And so what we did is, we were having some challenges at the other company we used to work for. And ultimately it was just that we couldn't help enough people with what they actually needed, because people would call me all the time and say, hey, can I do this? Can I do that? And I said, no, we've only got 4 or 5 products. So I said, after that happening, enough times, I was like, okay, well, it's really time to make a switch. We need to upgrade our product offering. And so we, transitioned over to the brokerage side of things, where we can offer these non-QM loans, DSCR loans, fix and flip loans, closing an LLC, commercial financing. Pretty much if there's a mortgage product out there for what you're trying to do, there's a good chance that we have something where we can, get that done for you. Like the traditional conventional loans are backed by Fannie and Freddie, right? Okay. So there's certain parameters that they underwrite to, and that's just pretty much across the board. When you have the non-QM loans, it's a totally separate, different pool of investors on the secondary market. And so, there's, hundreds of different lenders that offer, let's just say, DSCR loans. Not all of them offer DSCR loans in the same capacity. So like some of them might have a restriction on one thing, whereas, another lender might not have that same restriction. And so being able to place those loans with the correct lender and the correct loan product really allows for, a lot more magic to really happen. Whereas, if we didn't have those options, sometimes the answer is just, well, we can't do the loan for you. It's the whole BRRRR strategy just sped up and paired with a couple of different unique loan products that are a little bit more BRRRR friendly than your more traditional loan products. So like, let's say, if you're using a Fannie Mae or regular conventional loan and you're trying to implement the BRRRR strategy with that, sort of more of the traditional way, well, you can go ahead and renovate that property. You can buy it, renovate it, rent it out and everything, but you're not going to be able to refinance that property on the new appraised value until 12 months has gone by. So, a lot of people know it used to be 6 months before you could do that, and they just changed that to 12 months. And so that's not very supercharged, right? Who wants to wait around for a year after you did all this work to the property, increase the value, maybe you doubled it? You want to get that money back and repeat that process and continue it. And so when we start using these non-QM loans, a lot of them have the same restriction, but it's 6 months for the new seasoning period when you can go ahead and cash out, refinance that product. And so the trick is to use certain lenders that we have in our arsenal of lenders that we can write loans through. We want to use the lenders that don't have a seasoning requirement for how long you have to hold that property. So maybe it only takes you 3 weeks. Maybe you've got a good formula down. Buy and renovate that property. You want to go ahead and refinance that at the new current actual market appraised value. And so when we use the right lenders to do that, then you can do that DSCR loan, sometimes in as little as a couple of weeks after closing, once those repairs are done. So that's, one way to supercharge it. And the other way too is actually on the acquisition of the property as well. And so for experienced investors, we can actually do up to 100% financing for the purchase price plus the repairs on a given property. And so when you pair that all together, you can actually refinance it at the same lender that we did the original fix and flip loan through, and really kind of streamline the paperwork and allow the investors to really focus on what they do best, which is going out there and finding deals.
We work with about 250 lenders through our brokerage, which I know sounds like a lot, like, oh my gosh, what would you do with that many different lenders? Well, it affords us the ability to really go through with what we're looking for with a fine-tooth comb. And what we have, right? Yeah. And right, comes. And what we've learned is that we have come across lenders who are willing to make exceptions where the majority just do not. And it's not like there's 10 or 20 or 50 of them. There's 1, 2, maybe 3, right? But it's that difference. It's that little bit of a difference there that allows us to be able to do things that, just frankly, I don't want to say lenders, but even other brokerage aren't able to do, because they just don't, have that connection. They don't have that relationship already built, whereas we do. And so, kind of to follow up on that question, like, how do you get a DSCR on that? Well, I would say that it starts with a conversation with us, right? We are going to take the knowledge, the information that you have about the project that you're working on, and we're going to find a solution. We just will, because that's what we do, and we always do. Prospective homeowners waiting for interest rates to come down before they go buy. So guess what happens? Interest rates come down, we pre-approve them. All right, we'll go find a house. Well, now what's happening? Well, there's 100 other people, 1,000 other people, 100,000 other people that were waiting just like you were, and now you're out there competing with them. And guess what that's causing? It's causing prices of homes to to go up. And so now you were going to be paying $200,000 for this house, and now you're paying $250,000, right? And maybe you're having to come in over asking price in order to get it, right? This was the symptom of what we saw a few years ago when interest rates were rock bottom. Lowest they'd ever been. Is it just drove home prices straight up, and a lot of home buyers who were sitting on the fence waiting for rates to come down, who finally moved, couldn't do anything. They were wanting to buy. They had the pre-approved letter in their hand, running out there trying to find something. They just couldn't do it, right? And so that's just the truth. And that's why, like, interest rates, we mentioned earlier, marry the house, date the rate. I laugh and I kind of make jokes about it, but to some degree there is a little bit of truth there. For investors, though, again, it's no different, right? So, when interest rates were low a few years ago and home buyers were competing with each other, they were not only competing with each other, they were also competing with investors, right? Investors that were coming in and in some instances paying cash or putting large amounts of money down, to where it was just like, oh, well, we just can't beat them out. Because I was relying upon this 3% or 5% down loan, but this investor's coming in and kicking in 20, and I'm a seller, looking at these offers and saying, well, I'm going to go with the guy that's going to put more money down, more skin in the game, right? So with investors, it's similar, right? It's similar, and you don't wait, okay? And in this market that we're in right now, where homeowners are scaling back, throttling back their their home purchases, like I said, it's creating this incredible environment, incredible opportunity for investors to come in with little to no competition at all and scoop up properties.
What's one thing that you could suggest to a real estate investor who is ready to bring you a deal?
So the first thing I would recommend is that, let's start having these conversations now, as soon as possible. Do your research, do your homework, figure out what it is that you really want to do. Start talking to some mortgage people, give us a call, book a time on our calendar so that we can start to really iron out the things that are really going to ultimately matter when you're looking to try to get to the closing table. There's no reason to wait to have this important conversation, 3 to 6 months from now because you think the rates or you think the presidential thing is going to do whatever which way. Like let's have that now. Let's build that relationship now so that we can set the table for really what you're trying to do.